I'd like to welcome our final speaker, Senator Andrew Bragg. As I mentioned earlier, he was the chair of the Senate Committee on Australia as a Financial and Technology Centre, and yesterday's announcement by the Treasurer made it very clear that he'll be intrinsically involved in the recommendations that came out, not only of that review, but also of the Treasury review and the PJC review on digital wallets and mobile payments. Over to you, Senator.
Thank you very much, Andy, and can I congratulate you on coordinating this conference at this time. You obviously had the inside word ahead of the Cabinet on what was going to be announced yesterday as the nation's new policy, and I would like to start this address by acknowledging the traditional owners. This is a very good moment to have a conference because the landscape in Australia on policy in payments is about to radically transform. And I think that is entirely appropriate and perhaps overdue. I would say that the biggest single, or one of the biggest single microeconomic challenges for the country going forward is how we regulate payments. Now, as part of the research for this presentation, I asked the Parliamentary Library to find out how many times Prime Ministers and Treasurers have spoken about payments policy over the past 2 decades. And the answer is just 4 times. So payments policy has not been a top order issue for the elected governments of Australia. It has been a policy area that has been largely run by the Reserve Bank of Australia. And as we look to the future and we consider the great challenges the nation faces, which were identified largely in last year's intergenerational report released by the Treasurer, where you have a shrinking tax base, an ageing workforce, you're going to have significant need to drive productivity, efficiency into the future. And payments policy is going to be one of the biggest levers. So I think it would have been a great mistake to have left payments policy in the preserve of the Reserve Bank. Now, the Reserve Bank does a fine job, but it is an independent central bank with responsibility for monetary policy, and that is appropriate. But it should not have control over payments policy. That's because we live in a democracy, and the elected government and the elected parliament should stand in front of the Australian people every 3 years and seek election or a mandate for their policies. Now, given how important payments policy has become, it is appropriate that the Treasurer and the government say, here are our policies on payments, and you can vote for us or you can vote against us, and that is appropriate. At the moment, you have a bizarre situation where effectively it's all done in the dark without terribly much reference to the elected government. So 3 major inquiries over the past couple of years have been commissioned, and the first of those, of course, was the Farrell review. I think Scott Farrell did a great job with this review because he identified some of the structural issues. There's no question that the payment system has not been as dynamic as it could have been in relation to the regulatory component. I think much progress has been made by the market in delivering new innovation like real-time payments. But the regulatory framework really is frozen in time back to the time of the Wallace inquiry in 1997. The Farrell review identified that if we were going to move forward, we had to address the gaps. And this was also brought to light by a parliamentary joint committee which looked at the role of digital wallets. So digital wallets largely run out of California or maybe out of Shenzhen have been a major feature of the latest innovation in the payment system, significantly enhanced by the pandemic. More and more Australians are using digital wallets, but that is outside the regulatory purview. So we need to have a regulatory system which can capture all of the payments within the system, not just a few. And so that's why I'm very supportive of reforming the mandate and the separation between the Treasury Department and the Reserve Bank on payments. It is ridiculous, or we would be ridiculous, if Australia was to outsource our payments policy to organisations in Silicon Valley and in Shenzhen, or even to the Reserve Bank. The idea that the Treasurer and the government wouldn't have a view on how these things work, I think is very risky and very dangerous. And so that is effectively the first plank of the response, which is that the Treasurer has accepted Farrell's recommendations to put Treasury at the centre of the payments policy reform agenda. Of course, the second reform agenda is on cryptocurrency. And I was asked to chair this inquiry. I have to say that many people in Canberra have wondered why on earth I would be spending time on what has often been seen as a risky agenda. Now, it is true that cryptocurrency is about much more than just drug dealing. It is about the technology and the utility of that technology, and the utility of that technology to the economy that has attracted my interest. Blockchain and cryptography have the ability to sweep away layers and layers of intermediation and deadweight cost. Many people look at this issue through the prism of their personal investments. Is my Bitcoin going up or down? Is my Ethereum going up or down? But that is a fundamental mistake, because that is a failure to grasp the nettle that the technology underpinning it is sound. The technology underpinning it can increase choice in the market, can cut prices for consumers. We need to have more competition. We don't want to have our economy run by a bunch of oligopolies. And the same should be said for the payment system. And so that's why I was prepared to listen carefully to the arguments put forward by the industry as to why we should have a serious plan for cryptocurrency. And the plan that we have put forward took the Senate into places that it hasn't been before. There are words on Hansard, which is the official record of the Parliament, which have never been uttered before and may never be uttered again. But we were able to take more than 100 submissions, conduct public hearings, and listen carefully to all the different perspectives. Now, as a Liberal Party senator, I'm very aware of my political heritage. And Robert Menzies spoke about the forgotten people who were the small business people of the 1940s and 50s. And today, many of those small business people, people with an idea, who quit their day job to risk their capital, are the forgotten people. They might have an idea on a remittance service. They might have an idea on a peer-to-peer payments platform. Just an idea with a bit of capital. And these are the sort of people that are using the technology of blockchain, which we should be looking to support, because we should never be afraid of competition, and we're certainly not there in Canberra to run a protection racket for major institutions. Our job is to ensure that Australians can get the most choice at the lowest possible price. And so the cryptocurrency report brings this perspective to bear. There are three major planks of the recommendations. One is to put in place a core framework, which is licensing of markets, licensing of custody, and putting in place a corporate reform agenda around a decentralised autonomous organisation, which is a whole new form of corporate structure in Australia. We've also recommended that there should be tax reform. The capital gains tax settings are not fit for purpose when it comes to dealing with digital assets, and so we've recommended that there should be effectively a tax cut there for people engaging in this sector. And we also tried to address the very distressing topic of debanking. One particular person who came before our inquiry had been debanked 90 times. And the reality is that in many cases, the major financial institutions have acted like a cartel. They have sought to ensure that fat margins on things like remittances and international cash transfers were protected. People have been debanked and businesses have been debanked for very soft reasons. Now, I'm a liberal, and I'm not here to say that Bank A must bank business B. I'm very conscious that these arguments can come back to you. I don't want to see banks be forced to compulsorily finance a coal mine. I don't want to see banks be forced to bank a customer that they don't want. But we can't have a situation where banks are routinely debanking their competition, which is stymieing innovation and undermining choice and competition. We cannot have that. And that's why the recommendations we've put forward are a liberal solution designed to stop this sort of debanking, which is not what AUSTRAC is calling for. And after all, you can't be a crypto hub if you can't get a bank account. So what we have delivered there is a serious agenda on putting in place a core framework on cryptocurrency licensing so that there is a regulation, there is a market level of regulation. I have to say to you that I was surprised that so many people wanted to have regulation. Because once you invite Canberra into your house, we will never leave, and you may regret that. But we have nonetheless recommended what I think is a very targeted set of regulation. I'm not saying that a crypto market license would have the exact same obligations as a market license that would apply to the Australian Securities Exchange. I'm not saying that a custody or depository regime for digital assets would be the same as would apply to JP Morgan or State Street, which are managing custody services for managed funds or super. I'm not saying that a DAO would be the same as a PTY Ltd company or no liability mining company. What I'm saying is that we need to have new regulation established in the corporations law, enforced by ASIC, to protect consumers, to drive investment onshore. Because if we do these things, we can be a crypto hub. We can be a leading digital asset jurisdiction ahead of or on par with Singapore, the UK, and the US. Now, many people have bemoaned how long it takes to get things done in Australia. 11 years ago, there was a report done by Mark Johnson, who was a former deputy chair of Macquarie Group, into Australia as a financial centre. Last week, in Parliament, legislation that Johnson recommended was introduced. 11 years ago. If I'm here in 2022 talking about legislation that I recommended in what year are we in now? 2021? Sorry, if I'm here in 2032, I should say. If I'm here in 11 years from now, we have a major problem. We'll be in the soup. The good news is that Canberra can move fast, though, from time to time. We were able to put in place significant reforms that fell out of the National Innovation and Science Agenda from just a couple of years ago. But it is important that we move very quickly on these changes. Finally, I wanted to make the point to you that we have a window of opportunity now with what the Treasurer has announced. The Treasurer has announced that there would be significant consultation with the market over the next 6 months on what these new reforms would look like. And I am wanting to work with you and the members of AusPayNet to make sure that we bring that market insight directly to the markets group in the Treasury. I don't want to wait 11 years. I don't want to wait 2 years. I want to make sure that we can keep this to the timetable that the Treasurer has set out, which is that the bulk of the legislation be dealt with within 12 months. This is very ambitious. But as you know, other jurisdictions are moving quickly. I believe we genuinely have the edge here. The US Congress is still running public hearings into what sort of laws they should have to regulate cryptocurrency. We've already done that. The executive government, as of yesterday, has adopted a very clear plan on payments, cryptocurrency and digital wallets. So I appeal to you to work with me on bringing that market insight to Canberra. It is true that we are a long way away from the market in Canberra. We're a very, very long way away from the market in your area. And so I need your insight and I need your time. Finally, can I say, I understand that you have appointed a new chair today. Can I say to you that you've chosen someone that will do a very good job for you, and I'm very much looking forward to working with John and the team in your new role. Thank you very much.
Thank you, Senator. As always, some really far-sighted and interesting remarks.
I got a bit lost on the dates there, yeah.
No, all good. You've prompted some interesting questions. I think, firstly, let me just say, in response to your point at the end there, we very much look forward to working with you on this and collaborating on it. I think it's really important to your point. You rightly emphasised the need for speed and to act in a more agile fashion. There's a question from the audience about to what extent pieces of infrastructure like the new payments platform and potentially what the Governor spoke today about in terms of central bank digital currency, how that can help with that agility. So interested in your thoughts on that.
Well, I mean, I think that the core platform that has been developed, I think, is sound. I mean, the question for yesterday and the Treasury statement was, well, what's next? So I think, I mean, obviously the RBA has had a long-held view that it needed to have a seat at the table to drive some of the changes which were achieved in the last 4 or 5 years. And with that done, I guess the question is what's next? So I see that as a pretty strong platform to build on. And I think, look, in terms of the RBA and their view on digital currencies, I mean, look, I understand the view that's been put forward that, in large part, we already have a digital dollar because the bulk of transactions that occur today in this country are conducted digitally. I understand that. The question is, if you take the view that you don't want to do anything, then I think you open yourself up to significant risk. And this is really, and I like the RBA, right? I think it's a good institution. I don't think it should be running our payments policy. That's my view. That's not a personal slight on anyone. But when the RBA's job is not to think about the geopolitical implications, for example, right? So, for example, if we say, we're not interested in looking at a digital currency, then that means that we're not going to have a look at the digital wallet issues that are tightly linked to this question. And is Australia going to say, okay, we're just going to have, Apple and the Chinese government run our digital wallets? I mean, maybe we'll have an RBA wallet. Maybe the RBA will help facilitate there being the wider use of Australian-based wallets. So these are the sort of things that I think we should get into.
And I think Farrell's pretty clear on that, isn't it, in terms of a review, in terms of the role of the RBA expanded and the role of the Treasury to really think about issues like cybersecurity and sovereignty and so on. Talking about platforms, when I read your review, the review that you chaired, I mean, the way I read that was that, effectively there's a set of enablers for crypto, and they include things that you mentioned in your remarks around licensing for exchanges, custodial services, and probably most excitingly and far-sighted, decentralised autonomous organisations. I just wanted you to just expand on those remarks if you're able to.
Yeah, well, I mean, in terms of the DAO, which is the decentralised autonomous organisation, I mean, effectively, if you wanted to do DeFi in Australia, it's very hard from a tax point of view and from a structural point of view. So we try to address the tax issues where basically you have a capital gains event every time you exchange a token, which means that the smart contracts and the DeFi systems don't really work. So we tried to deal with that, and that's been addressed by the Treasury yesterday by commissioning a border tax inquiry, which is great, right? So, I mean, by the way, can I say, this has been a really good example of how you can work with, how we can work together, as we have, and then we can work with the Treasury to actually get something quite meaningful done. I know the proof is in the eating, but I think it is some good traction. And on the issue of DAOs, I mean, we want to make sure that we have the corporate structures in place to facilitate that. So I think it's pretty simple. I mean, that's what it is.
And that's sort of an enabler on one side, but it's also allowing for consumer protection on the other, right?
Yeah, I mean, obviously, we at the moment it's totally unregulated, right? So if someone goes in and buys crypto tomorrow from an Australian-based exchange, I mean, there's no crypto. There's no consumer protection. And if you do your shirt, you've done your shirt. It's interesting the way that some of the organisations are setting up their crypto exposures for their customers. I mean, some of the major financial institutions are using US-based custody systems and US-based markets. They're not willing to use Australian-based entities, and then they're white labelling it, which means that the jobs and the investment dividend of that is going to the United States. So there are compelling economic reasons to try and bring as much of it as possible onshore, but also at the moment, I mean, people are totally exposed.
Exactly. You mentioned Robert Menzies' point about small business. Slightly changing tack, but reading the government's digital strategy, there's a big emphasis on SMEs and what can be done to support them. And it's interesting when I talk about with various stakeholders, we think of something like the consumer data right, but it's consumer in the big sense. It's individual consumers, but it's also businesses. What more do you think can be done to support SMEs digitally?
Well, I mean, the digital adoption piece is a key agenda of Jane Hume's portfolio, and I think the pandemic has shown that unless businesses are digital, then they're going to have a pretty hard time. And so I think it's adoption of the best systems, right? It's about getting away from paper. It's about helping small businesses get up the digital curve, and that's what we're trying to do and putting extensive funding and resources into that. So that is one of the key tasks the Prime Minister has given Senator Hume, who's one of the best ministers in the government.
And just back on the Farrell review, but linking it to yours. I mean, I think there's a theme around licensing of institutions. My thought on that has always been that and Australia's not unique on this, but a lot of licensing today reflects what I call money at rest, so deposit taking. So you're licensed because you happen to take deposits rather than money at movement, payments. And so I read Farrell, but I also read your review as saying, well, actually, anybody involved in the wider payments ecosystem, including crypto, should be appropriately licensed. Is that a fair read?
That's my view, and I just think you have to have strong prudential rules behind these organisations if they're going to be holding money on behalf of other people. I think that's a principle we have. And I mean, I'm a fan of competitive neutrality, but I also know that if we applied the same rules to crypto as we apply to banks or insurers, then we wouldn't have a crypto industry. So you've got to be, so it's going to be a real balance. And I think the reality is we have, a bunch of licensing systems already in the Corps Act, so we've just got to find the right system. So this will be driven by the level of input we get from industry, and I'm hoping that we'll be getting a lot because I've been asked to assist on this process. So I'll be leaning on you, Andy, to make sure we get the best information on how we can do this, because we want to make sure we protect people, but we don't want to destroy the joint.
No, good. And as I said before, really happy to help on that. I'm conscious of time. So one final question again, thinking about one of the points that Scott Farrell makes in his review.
Yeah.
There's the point about government taking more of a leadership role, and I thought you covered that well in your remarks. And the Governor earlier mentioned he welcomed that, and we in our submission pointed to what's often perceived as a coordination problem between regulators. Actually, the solution is to get government and regulators and industry together to coordinate that better. But another point that Scott made was around government's role actually in making payments and how it thinks about its role in driving new payment systems like NPP in helping deal with legacy payment systems like cheque, for example. And there's obviously a lot of work that government's doing around modernising business communications. That includes not only technology neutrality but payment neutrality. But interested in your view on those sort of more practical steps that government can take in driving some of that.
Well, I mean, the government can provide real-time payment services to its customers. We're a pretty big customer, the federal government, and so e-invoicing and all this sort of stuff that we should be doing ourselves is a key thing that we can do and we are doing, and we have made a lot of progress. But I'll put this back on you again. If you have, or your members have any particular ideas, I'm very happy to talk to Simon Birmingham, the Finance Minister, because I know that he's keen for some efficiencies. Because at the end of the day, if we are an easier customer to deal with, then we'll actually save taxpayers' funds. So that's a good thing, right?
Absolutely. So yes, we can work
good.
with you.
We're going to be talking about a lot of stuff, yeah.
We are indeed.
Oh,
so look forward to working with you on that, and thank you for your time. I know it's precious, and particularly given yesterday's announcement, you're going to be even busier. So thank you, Senator. In closing, I'd like to thank the Governor of the Reserve Bank, Philip Lowe, for his excellent insights on the Australian payment system and its future. I'd also like to thank Marlies Laros, Zach Aaron and Rajat Jain from Deloitte for a fascinating panel on digital wallets in Australia and globally. Senator Andrew Bragg for his thought-provoking, far-sighted remarks on banking and cryptocurrency. I'd also like to thank all of you, almost 1,000 of you who registered for attending today, for your time, attention and engagement. I know we're all tired of virtual events, so thank you for making the time and engaging with us this way at the end of the year, and also for your questions, which were excellent. I'd also like to thank the AusPayNet Summit team for all their work in preparing today's event. And that just leaves me to wish you all a fantastic and safe festive season, a wonderful new year. We at AusPayNet look forward to seeing you in person at one of our events in 2022, including the next Australian Payments Summit. Thank you and goodbye.